If you've received a mortgage quote, which is also known as a European Standardised Information Sheet or key facts illustration, then it can be quite overwhelming to look at all of the details that are involved. In this video, we're going to be breaking down some of the key sections into bite-sized chunks for you. On the very first page, you'll see details of the lender and the broker. This will include contact details and address and so on. This should also show details of any commission that's payable from the lender to the broker. In the next section, you'll have the product details itself. So you'll have the type of interest rate, so whether that's a fixed rate or a variable rate, such as discount and tracker rates. You'll have the loan amount, you'll have the repayment type, whether that's a capital repayment or interest only. You'll have the mortgage term, so how long the mortgage runs for, and you'll have the interest rate itself. Next to this, you'll also find the product expiry date. So for example, if you've chosen a 5-year fixed mortgage, then you'll see an expiry date in 5 years' time, roughly speaking. This can vary by a couple of months here or there. After this product expiry date, you will then fall onto the lender's standard variable rate or potentially even a lifetime tracker, whichever the follow-on rate is. However, it's key to note that the follow-on rate here is subject to change because these are variable rates. There'll also be details of the monthly payments for both the initial product rate and the follow-on rate. Again, the monthly payments for this follow-on rate are subject to change depending on what happens with the lender's standard variable rate. We aim to make sure that none of our clients fall onto this standard variable rate as we look to remortgage towards the end of that product expiry. This helps you save money and helps you pay off your mortgage in the most cost-effective manner. If you'd like more information on remortgages, we have made a separate video on this, which I will link in the cards and the description. In this section, you'll also see the annual percentage rate. Now, this rate will be higher than the initial rate that you have for your product, but what it does is it takes into account all of the costs involved rather than just the initial interest rate that you have. Following on from this, we'll also have the fees involved with your chosen mortgage product. There are various fees that can be included here, and it'll include the arrangement fees for the lender, valuation fees, account fees, completion fees, and it'll also have your broker fees if applicable. The time that these fees apply will vary, but it will be listed on your mortgage quote. So for example, valuation fees will generally be paid at the point you submit your mortgage application, and lender arrangement fees generally have two options. So you can either pay these upfront or you can add these to the loan amount. Do bear in mind that if you do choose to add these arrangement fees to the loan, then you will be paying interest on this fee over the full term of your mortgage. So although it will save you that initial outlay, it will cost you more in the long run. After this section, we've got details of any early repayment charges that may be applicable to your mortgage product. This is a charge that is paid when you're redeeming your mortgage in full within that initial product period. Any additional payments that you make towards your mortgage which exceed your overpayment facility will also be charged at this percentage rate too. Now, whether an early repayment charge would apply to your mortgage is going to depend on what mortgage product that you select. It's common to see early repayment charges where you are arranging a fixed mortgage. However, even then, there are some lenders that will allow you to arrange a fixed mortgage with no early repayment charges. An early repayment charge is generally a percentage of the loan amount. In the next section, you'll also see details of any flexible or additional features that apply to your mortgage product. This will generally include whether or not your mortgage product is portable. So what this means is that whether you can transfer the mortgage that you're going to take out over to a new property if you was to move home. This can help avoid any of those early repayment charges that we mentioned earlier, because you wouldn't be redeeming this mortgage in full. We have made another video on porting mortgages, and I will list that in the cards and the description of the video. You'll also see details here of any overpayment facility that you have. It's quite common, even for fixed mortgages, to have overpayment facilities, and this is generally up to around 10% of the outstanding mortgage balance. So if your income is more sporadic rather than consistent monthly earnings, then a product that allows more flexibility with overpayments may be more suitable for you. And similarly, in this section, you'll see details of whether you can make underpayments on your mortgage. It's also common for this section to show any incentives offered by the mortgage lender. This can include a free mortgage valuation, it can include cashback, or it could even include a free legal service for remortgages. So next up, you'll see a large table outlining your payment schedule over the full term of your mortgage. This will usually start on a month-on-month basis, and then it will go to an annual basis. The good thing about this payment schedule is that it will note down how much of your monthly payments or annual payments when you get further down the list are going towards your actual debt, so the capital, and how much of this is going towards interest payments. You'll also see a column which outlines the remaining balance after each month and then each year. However, a couple of things to point out here. Firstly, this table will assume that you fall onto the lender's standard variable rate, and it'll assume that this rate remains as it is currently. Obviously, this is very likely that it would change throughout the mortgage term. And if you were to make any overpayments on your mortgage, or if you have an offset facility that you make use of, then these figures will change as well. And lastly, you have a comparisons list. Now, this would be if you went to a mortgage broker rather than a bank or building society, because brokers can compare lots of different lenders rather than just one lender's products. This may either be within your mortgage quote, or it might be a separate document which is provided by your broker. Generally speaking, you'll see a list of between 30 and 50 lenders on this table, and you'll have the most cost-effective lender at the top, and then this will scale down to the less cost-effective lenders. Now, hopefully you'd be at the top of this list, but there are obviously circumstances where you might not be able to access the products at the top of this list. If the mortgage recommended to you isn't at the top of this list, then your broker will discuss with you why this is the case. It may come down to affordability, it might be down to the actual property itself. There are so many factors that could be involved, but so long as you know the reasons why a particular mortgage product has been recommended, then you're good to go. So let's hear from you. Have you got your mortgage quote? Let us know in the comments. If you'd like any further information at all, please feel free to leave us a comment or message me directly. I'll leave all links in the description of this video. Before I let you go, I'm obliged to tell you that your home may be repossessed if you don't keep up repayments on your mortgage. Thanks again for watching. I look forward to bringing you more content next week, and I'll see you in the next one.